Well, it's never pleasant to see a stock get clobbered after earnings. Alphabet, the parent of Google, being no exception. We have to start to think of, is this a company-specific problem, or are there broader ramifications for the industry on which it resides? I'm going to say in the case of Alphabet, and if I slip and call it Google, I'm going to do that because it's still Google to me. In the case of Google, there's some of each. One particular issue that Google has always had is that they've really been very tight-lipped about guidance. Whereas many companies, I think, go out of their way, if not publicly, but privately with analysts, to shape expectations. Google really doesn't do that. They haven't for some time. That's really never been a problem for them in the long term because their business model is so strong, their reach is so enormous. So if you're just consistently delivering great results, you really don't have to be too concerned with guiding the street. The problem is if you don't guide the street and you miss, that's not pleasant, and that's a lot of what we're seeing after their earnings release is that they kind of blindsided the analyst community and the investor community, and that's never good. So it doesn't. I'm not necessarily advocating for companies to be out there massaging their numbers, their analyst expectations, but understand from an investor point of view, if you're investing in a company that doesn't do that, they darn well better deliver, because if they don't, the miss is just penalized that much more. The other thing that I would say is a takeaway beyond, let's say, just specific to their business is, remember, they are extraordinarily advertising dependent. Basically, at the root of everything is Google's ability to sell targeted ads. And I think the market is a little concerned that may be more of a broad-scale problem than a short-natured problem. Think about the prevalence that we've seen in digital advertising and how Google is really one of the dominant players. It's essentially Google and Facebook dominating that business. There is a tie to the broader economy. There are secular trends that are reflected in advertising spending. And I would be concerned, not necessarily off the one quarter so much, but if we saw that ad rates continue to be lackluster, or companies really just don't see the value in, let's say, buying the top search result or paying for the premium prices for the advertising, that could actually be a fairly important flaw to the business model at Google and its parent Alphabet. So that's the thought process that I want investors to have. I'm not enough of an expert on digital advertising to opine one way or the other about where this goes. But what I will say is you better keep a close eye on that. And if you are a Google investor, you probably should become fairly cognizant with what's going on in that end of the business, because so much is driven by that. They're such a big player in that. If there's problems in that space, it can bode poorly for Google. On the flip side, if it's a blip, then it may provide a very good buying opportunity. I'll leave it to you to make that decision.